Welcome back. You are watching KTN News, and my name is Joy Doreen Bira. This is Business Today, and would now like to hear the perspective of investment analyst Duncan Lomwamo, who is a senior investment analyst at Cyton Investment, on what exactly is happening in the market today. And I would like to start with the Cooperative Bank results for the Q1. Duncan, if you can hear me, good afternoon. And what exactly do you think about Coop Bank's results? They have actually posted a 9.8% jump in profits.
I think what we're seeing from Corporate Bank more in line with what the transformational strategy they are putting in place. We've seen the numbers coming in, a good, strong growth, a fairly strong growth if compared to the banks that have released when it comes to operating revenue. A good growth also when it comes to interest income in general. However, on the cost structure side is when they are a bit straining, because we saw about 21.7% growth in operating expenses. We'll attribute this majorly towards the transformation agenda which they are coming in through, which maybe they could reap in the next 1 to 2 years.
Right.
But however, for now, it looks a bit more of a thin bottom line because of the heavy costs they have gotten.
All right, so it just appears to be that most banking institutions, of course, will record a jump in profits for most of their first quarters, but then it doesn't appear to be the same thing when it comes to the second quarter.
However, this quarter is a bit unique. Remember, we are still having a lot of pass-through from Q4 last year and Q3 when we had high interest environment.
Right.
So a lot of that spillage is coming in through. But remember also what we saw in the first quarter, quite a number, when Chase Bank was closed, coming in after Imperial Bank had been closed. A lot of changes are being put in place, a lot of much tighter audit mechanisms coming in through. So you could see a lot of increased provisioning also of loans, as you've seen in nearly all the banks that have released. So it's just a passover effect from what we saw in Q3 and Q4 last year.
All right, let's talk about the tax collection for the Kenya Revenue Authority as well. You know, they actually say that one of the major challenges they have in tax collection may come in collection of pay-as-you-earn, corporation tax or business tax in this case, as well as import duty tax. But where do you think the biggest problem is with these different taxes?
I think the biggest problem where we are seeing it from KRA is the level of implementation. They are coming up with new measures recently. We've seen now the launch of iTax and more of giving it a technological transformation. However, the overall ability of KRA to collect and make sure that they loop all tax laws that are there, it's what's holding them back currently. But also looking at 2015, for example, the business environment was very challenging. We saw private sector credit also affected. We saw quite a number of companies struggling. And if you notice also on Nairobi Stock Exchange itself, over 10 companies actually, close to 15 issued profit warnings. So this is just an indication of the tighter business environment from a fundamental side. But from an operational and implementation side, KRA is still lagging behind in terms of tightening all the loopholes they have on tax. But it's a good step for them trying to bring in now more electronic forms like the iTax system. And remember, the more we have our tax revenue shortfall, it immediately impacts our budget capability, which will in turn maybe lead the government to increase local borrowing or foreign borrowing, which both of them have an effect. When we increase our local borrowing, interest rates are bound to get upward pressure. When we try to go to the foreign borrowing on the other side, we also get a huge burden when it comes to payment of the obligations because of the forex implementation of it. So I think where we are sitting, we're expecting going forward that we'll have a much more stronger ability to collect taxes locally. And also now that the businesses are improving, on a net effect, the base of tax collection is improving. So we may be looking at a much better performance going forward.
All right. And finally, you know, the LAPSSET project as well has come up as a topic of discussion on various platforms. And, you know, with Rwanda as well opting to have its railway line go through Tanzania, and Uganda only recently opting to have its pipeline go through Tanzania as well, there is a feeling that the LAPSSET project might not be a success.
Yeah, it's quite a big challenge when you see now some of these key infrastructural projects which were to open up the node being shifted. But ideally where we are sitting up, it's not really a big setback, as you could say. We still are the corridor towards the wider Eastern and Central Africa region. Mombasa Port is still one of the key entry point to the African nation. So even if we are to try and discount the fact that it's going south to Tanzania, I think overall in terms of the coastline, we are sitting in a much more richer coastline where we have, remember, the ports have been expanded.
Yeah.
In Mombasa, the berths have also been expanded around that. So overall, Nairobi, Kenya as a nation and Mombasa as a port together with Lamu seem to be the most attractive. So we might lose out maybe on the pipeline deal and the overall route in the initial launch, but the wider connectivity is still there. As much as Rwanda will take theirs through a different nation, the oil pipeline passed through Tanzania.
Yeah.
We better look at it from a bigger standpoint where now that East Africa as a nation is interconnected. So I think we just have to also support each other regionally.
Yeah.
Maybe let Tanzania also try to open up their markets.
Okay, well, thank you so much, Duncan. Duncan Lomamo is the Senior Investment Analyst at Cyton Investment. Thank you so much. Now, away from that, let's now focus our attention on EcoBank. And they are